Greetings, everyone. I'm excited to welcome Darrin Murriner, co-founder and CEO at Cloverleaf. Darrin, welcome to the show.
Good to be here. Thanks, Ben.
Well, excited for this episode. So let's dive right in. Tell us a little bit about your background.
Yeah, well, so I'm co-founder and CEO of Cloverleaf. We founded this in 2017. And prior to that, I had about a 15-year corporate background. So I would say I've always been an entrepreneur, but it took me probably 15 years to figure that out. And definitely my very first entrepreneurial journey was, selling things to my classmates in fifth grade so that I could buy the original Nintendo Entertainment System. So that'll definitely date me for some of the folks in your audience. But kind of took a more traditional corporate path, and ultimately kind of got to a point where it was like, hey, I want to build something unique and valuable in the market, and I want to make a bet on myself. And Cloverleaf was kind of my vehicle to do that. So
Okay. And so is that, it took me, I don't know, 20 years to get to the entrepreneurial journey. So yeah, right around that time. So Cloverleaf, that first leap then from corporate into the founding world.
it was, yeah. And a lot of my background was, and this is gonna really just blow your mind, but was more audit, banking, finance, insurance kind of background. Which nothing about that sounds entrepreneurial, but it was a great career path, gave me an opportunity to meet some really great people and get to see a lot of parts of large business, large enterprise. And I think it definitely contributed to some of the ways that we built our product and why we kind of jumped out into creating Cloverleaf to begin with.
Yeah. So looking forward to that founding story. So yeah, let's talk about Cloverleaf. So what products and or services does Cloverleaf offer?
Yeah, so we're an automated coaching platform. So there's a lot of, I would say, coaching startups that have started in the last maybe 5 to 7 years. And I think a lot of people think about companies like BetterUp. And I think a lot of the businesses in the market tend to be more like BetterUp, where it's like, hey, we're connecting coaches to human coaches to people who need a human coach inside the organization. I think the problem with that traditional market is that it's not really scalable and it's not accessible to anyone beyond maybe the top 2 to 5% of people in an organization. And we really felt like, given the fact that there's an explosion of data, newer technologies like AI that, can be leveraged to build a scalable, what we call automated coaching solution. What makes our solution really unique is really kind of 2 points. One, we use behavioral assessment, so tools like Myers-Briggs, DISC, Enneagram, StrengthsFinder as data points to start that coaching journey. And then in addition, we integrate with the tools that employees use every day. So email, calendar, Slack, Microsoft Teams to live in the places and the tools that employees are working. So they've got for lack of a better term, a development Sherpa that can kind of, come alongside them in their interactions with the people and the teams that they're engaged with on a daily basis.
Yeah, so really interesting. So tell me, so what, of course, coaching is really popular today. I do see, I say finance and accounting coaching, but what type of coaching are we talking about? And then also tell us, are we going after large corporations here, small, certain industries? So tell us a little bit about your ICP, but what type of coaching?
Yeah, well, obviously, anyone could use a workplace coach, especially one that is as affordable as what our solution is. So we do serve everyone, but I would say our focus from a go-to-market standpoint is really large enterprise and mid-market. So I would say companies with 1,000 or more employees. And to your original question of, like what part of coaching, right? It's really more of the behavioral and the interactions. And what I mean by that is really kind of self-awareness and others awareness and how you navigate those differences. So if you think about a lot of the challenges that people face in the workplace is very interpersonal. Conflict, misunderstandings, and oftentimes that arises just because we don't have a really clear understanding of who we are and how we do our best work. But also we look at how other people work and we make assumptions about why they say or do or process information the way they do. And so we're really trying to help individuals navigate those differences in the moment. So a good example is our calendar integration. We can look at the folks that are going to be in the meeting and give you very specific tailored strategies to be effective with that group of people. And so it's really that kind of common behavioral layer behind how we do work, regardless of whether you're in sales or you're in finance or you're in engineering, right? Those differences exist inside of intact teams, but also in that cross-functional collaboration. And I think that's really where we have a big impact.
Yeah, really interesting. So, I look back at my finance career and in certain roles, it's like, gosh, I wish I had been more assertive. You leverage my knowledge more. So could that be like, would that be a good use case within this of like, hey, Ben, here's how you should interact. This is your role. Here are the people in here and help in that situation.
Yeah, absolutely. I mean, I think, it can kind of work both ways, right? If you're in a group of dominant personalities and styles, but you kind of sit back and take it in, you're not extroverted, you might not have a really kind of dominant approach to interaction. It could remind you that like, hey, you've got things to share, make sure you find the time and space. But I think it's more importantly, it's to the other people, right? Those folks who are a little bit more dominant and might hog all the airtime in the conversation. It's a good reminder to them to say, hey, Ben's got really important contributions to make. Make sure you create time and space to say, to ask for Ben's contributions and his thoughts. And so it works both ways, right? It's a really nice reminder that, hey, our natural style might not work for everyone in the room. And if you want the best decision, you want the best strategies moving forward, you really have to lean in and make sure that you're taking feedback and input from everyone on the team so that you get to the best outcomes.
Love it. And so you mentioned your ideal customer profile is mid-market to large enterprises, so 1,000 plus employees. And so when you go into an enterprise, say 1,000, employee enterprise, are you rolling out to the entire org, certain departments? Tell us how you then kind of expand through that org.
Yeah, we really do have a little bit more of a land and expand model, which is, I would say, not super common for, like learning solutions in the SaaS space. Typically, I think things sold to HR or maybe less so in the learning space, but even still there, is oftentimes sold top down, and it is rolled out enterprise wide. I think the nice thing, because there's so much applicability, even if you have a lower level manager or mid level manager in the organization, in a line of business that is really struggling, or maybe aren't struggling, but they're just like, hey, this is a new team that I just took over. And I really want to get to know how to lead these people in a really effective way. Oftentimes, if they go to HR, maybe they're using their HR business partner, or they're even going to learning or development teams. They might not necessarily have really good solutions to help them with that problem. And so we've more than 50% of our initial buyers are non-HR buyers because they're facing those problems in their day-to-day work. And they are looking for digital solutions to help them with that when, in the absence of kind of larger corporate wide kind of solutions.
Yeah, no, I was gonna. That's really interesting because I was gonna say probably you're reaching out to that human resources department, the people department to try to sell this, but it sounds like also other departments. And when you go in, say you go into HR people department, and is this something where I assume at these revenues are employee sizes, they have a formal training budget plan. And is it something where they have to reshuffle budget if they're interested, or they make room for this for your product because it's so different than what they've done before?
Yeah, I mean, I think oftentimes we're able to tap into budget that exists. Companies do spend heavily on behavioral assessments, right? $4 billion a year is spent on behavioral assessments. And, so sometimes it could just be reallocating some of that budget. The other thing is coaching. And oftentimes at an enterprise level, those folks in L&D who might be, responsible for procuring coaching resources, oftentimes that purchase is very decentralized in the same way that the assessment spend is decentralized because you have a manager or leader in an organization and they're just like, hey, I want to get a coach for this person, or, I want to get a coach for our entire leadership team. They're oftentimes not going to their L&D department to do that. They have somebody in their local geography that is in their network, and they just reach out to them and say, "Hey, really like to get some coaching for this person. What would that look like?" And so oftentimes in like L&D or HR, they don't really even have a clear understanding of how much money is even being spent on behavioral assessments and on coaching. And so having a platform where that can be centralized and, more centrally administered, right? And have some more controls around that process is also a really nice benefit at the enterprise level.
Yeah, no, that's interesting. Because on my academy side, kind of you say work in the education space, courses, training. So really interesting to hear about the internal workings of that. So you founded Cloverleaf. Was it 2017?
2017. Yep.
Okay, and you have one co-founder.
One co-founder. Yep.
Okay, and tell us about that combination. This co-founder bringing a different skill set or experience to Cloverleaf.
Yeah, I mean, I would say we're very unique. Her and I had worked together at a previous company, and neither of us had a background in HR, right? So it wasn't like we had a 10 or a 15-year career. We also are unique from the standpoint that, neither of us have technical backgrounds, and really neither of us have had experience in sales. Now, I would say I'm a hustler, so I've led the sales organization to get it to this point, but I, that's very unique, right? I mean, I think if you think about the typical or the prototypical kind of co-founder team, it's usually a technical co-founder and, kind of a sales or a business co-founder. And so that was pretty unique for us. I think we have a fantastic relationship, right? The people that have interacted with us or the folks on our team, oftentimes people walk away and they say, man, it's clear that you guys have a really remarkable business relationship. And, we're 7 years in now,
Mhm.
right? I would think that, hey, if some of those challenges would have manifested, they would have manifested by now. And I do think some of that is a credit to the product that we built and to kind of the unique perspective or lens on that we have. But yeah, with great relationship and, traditionally what's happened is she's led most of the product and the engineering side of the business, and I've led most of the go-to-market side of our business. So it's kind of kept us, with some clear lines of responsibility, and I think that's been a really good thing.
Yeah, that's a great combo. So founded in 2017, and then do you have a headquarters location or are you virtual?
Yeah, I mean, our headquarters is in Cincinnati, Ohio. We definitely do have a pretty remote workforce. So I would say it's probably 55 to 60% Cincinnati area, and the remainder is kind of really spread across the country.
Yeah, pretty common now. And then what's your current team size?
We're 45, and most of those are full-time folks, but we do have some part-time
Yeah.
included in that.
Okay. And then anything you want to share around ARR revenue ranges?
Yeah, I mean, we're in that kind of 5 to 10 million ARR range. I think one of the things I'd mentioned this earlier, we have a real that how we've gotten, beyond $5 million is not necessarily what's going to get us to 25 million in ARR. And so, one of the things that we're really focused on right now is hiring a head of sales and a head of marketing. So I'm sure some of your listeners probably have some great connections there and, definitely reach out if there's some interest.
Oh yeah, definitely happy to share it through my communities and networks. So that's great. Yeah, if you're 5 to 10 million, great size, closing in on that 10 million. And then tell us, so we're after large enterprises, which is probably a unique challenge within itself, 1,000 plus employees. So tell us a little bit about your go-to-market motion to talk to the HR leader or other department leaders.
Yeah, I think the land and expand piece is a really unique element, right? I think we really just trust that the product is going to do the job in terms of selling and really kind of helping drive that expansion. So there's definitely some things that are built into the product to really help that expansion motion. I think the other thing that's really unique is we have a channel strategy as well. So in this space, we actually come alongside coaches and human capital consultants who are building their own businesses. Oftentimes they lack digital tools that can kind of help scale and sustain the work that they're doing. So, the only way a coach or a human capital consultant can make more money is work more hours or charge more for their hours, right? So that's a tough proposition to be in. And so if they really want to build a long-term sustainable business, having a digital solution that they can kind of bring in with their, more traditional coaching services or consulting services provides a little bit more sustainability and some kind of recurring revenue opportunities to their business as well.
Okay, and then so channel strategy, and you mentioned hiring a head of sales and marketing. So is it still founder-led sales right now, or do you have some sales reps on your team now?
Yeah, no, we have a team of about 5 folks, and, 3 of them are really focused on kind of the enterprise selling piece of it. We've got one person that's focused and dedicated on bringing in new coaches and consultants into our channel partner strategy. And then we actually have somebody focused on more traditional kind of partnership strategy. So really integrating with larger platforms like Workday and Cornerstone, where there's some really great synergy and we can bring some solutions that maybe aren't necessarily inherent in their product suite.
Okay, yeah, that's interesting. And I'm curious, this comes up, when I work with SaaS metrics and sales marketing efficiency. So three enterprise reps. So are they responsible for both new business acquisition and then post sale, then expansion after that?
Yeah, and another really interesting part of our business is all of our stuff is inbound. So we haven't gone the traditional route of using, SDRs, BDRs with a ton of, kind of outbound motions built around that. I'm not saying we wouldn't get there eventually, right? But I do have, concern about the effectiveness of that kind of approach, especially at earlier stages where you're bringing some new solutions to a market as opposed to being in a more stable, not even really stable, more well-defined, right, market niche. So most of our stuff has been inbound. They do a little bit of prospecting, but most of it is really kind of that nurture. Once we have somebody, that is using our product, how do we make sure that we nurture and develop that growth into bigger long-term strategic kind of partnerships with our customers.
And that's great. So that inbound motion, so you don't have to push much out and say cold email campaigns. So with an inbound motion, are we talking paid ads, content, SEO, blogs? How are you generating that inbound lead flow?
Yeah, pretty heavy focus on content, and then,
Mhm.
I mean, I think the other piece is the channel strategy, because those coaches working with their clients, there's a clear kind of off ramp for them to work directly with us, and so that's another component, and then I think the partnership angle as well has been really strong. So really, all three of those are important. We have created a bit of a product led experience as well, so that hey, when people do come to our website, it's really easy to try it themselves. So, that's something like we can even offer to your listeners here is that trial experience. And then, hey, if you're at a certain size and you're looking at leveraging Cloverleaf in a more scalable way across the enterprise, and that's when an AE would get engaged.
Okay, yeah, yeah, really interesting. Appreciate that insight. So let's switch to the capital, the fundraising front. How much capital have you raised to date?
Yeah, we've raised right at $20 million. I can say that now that we just closed this most recent round, and so yeah, 20 million in total capital raised.
And it looks like so that most recent round that's public it looked like it was characterized as a Series A extension for about 7 million. Is that right?
Yep, yep.
And tell us, because I cover those fundraising events at my SaaS news site. So you see a lot of these like seed extension, A extension, B extension. So tell us a little bit about that. Is that just the syntax and we shouldn't put too much, thought into the extension word? Tell us, about that round.
Yeah, I think part of it is just a function of the market that we're in right now, right? I think if it had been in 2020 or 2021, that probably just would have been called a Series B, and it would have even been up for a higher amount. I think with the focus on the cost of capital and being really capital efficient in terms of how you're using that, and just at the stage of growth that we're at, right? We were kind of in this in between phase where we're kind of past the Series A, but we're maybe not quite at the scale that we needed to be for a Series B. So it was easier for us to just call this really a round extension and do more of a traditional Series B, year and a half. Hopefully interest rates come down and capital markets loosen up a little bit and you can get some better, multiples on that invested capital as opposed to kind of where we've been over the last 12 to 18 months.
And tell us about, so I assume we kind of went through the seed, of course, Series A, now an extension. So tell us a little bit about your founder perspective on the fundraising process, and say bootstrap versus raising capital and just, what did the fundraising, like the triggers or what led to these fundraising rounds or just your philosophy towards raising capital?
Yeah, I mean, we've always had a really big vision for the product that we wanted to build. So, I mean, I think from very early on, we said, hey, the venture backed route was the path that we wanted to go down. Definitely, see a lot of really great businesses that are bootstrapped, and I think potentially we could have even bootstrapped, longer in that cycle. But I would say for us, like we knew we were going to head down that path, and largely because one, we didn't have a technical co-founder. We knew we needed some really unique, specific skill set on the engineering side that we were gonna have to invest, ahead of where the revenue was going to be. And I think for all of those reasons, we knew that fundraising was going to be a part of our strategy. And I would say, so that's like one part of that question. I think the other part of that question is just kind of like the overall fundraising journey. And you're right. We did kind of, at the time, pre-seed wasn't used maybe as much as it is today. But I would say, like, if we were to put it through today's lens, we did kind of a pre-seed and then a seed and then, kind of an A and now this A extension. So, and each time it's gotten, successively larger. But I would also say that, part of it is also about the kind of capital partners that we brought on at each round in that funding. So the first round was largely angel investors. And then it really wasn't until like kind of like starting in that second round, really more into that third, where we started to bring on more knowledgeable kind of traditional venture backed funds into that mix. Also, I mentioned we're based in Cincinnati, Ohio. So Midwest generally hasn't had kind of the availability to capital and investors and funds that, maybe exist on some of the larger coastal markets. And so that's definitely been a part of our story as well is like, hey, we wanted to raise smaller rounds in those early stages, largely because the cost of capital was frankly higher for us, even when it wasn't maybe as high for somebody that, started their business in the Bay Area. And, the one good side of that is that our valuations weren't crazy and, we weren't struggling to continue to raise money even in a tough or a tight market. But the flip side of that is, finding access to the right amount of capital at the stages that we were at was also sometimes pretty difficult.
And with that Series A raise, so the other, for the founders who may be listening, they've raised a little capital, maybe pre-seed or seed. Any lessons learned along that way with that Series A? And also, just curious, what were there specific signals or triggers that led you to say the conclusion that we're ready for a Series A?
Yeah, I mean, so I would definitely say at each round, we've had some milestones that we've really kind of focused in on and said, hey, we think this is what we need to be able to prove or accomplish at this stage. And, early on, it was kind of that like, hey, that there's a market here, right? There's even something that people will pay you for. At the stage that we're at now, it's more about, refining or answering some of those questions about kind of the scalability of our go-to-market motion. And so at each stage, there have been very specific questions or milestones that we've wanted to either achieve or answer. But I would say, overall, there's probably not one in particular. I think, if I were talking to a founder on the other side of a table right now, I'm probably going to ask a little bit more about some of the specifics of their business and, what are some of those big strategic questions that they need to answer, and a really good way to ask yourself that question is like, hey, what kind of tough questions are investors going to ask you? Right. And if you don't have good answers to those questions, then those are some things that you should maybe want to try to focus in on. And so we always really continue to grow and nurture our network of investors. And we would ask for referrals. People would refer us on. We always, I think, did a really good job of kind of delivering on the things that we said that we were going to deliver on. So even if we were talking to investors that were at a later stage, they could get to see our progress and see that, hey, we were doing the things that we said that we were going to do 2 years earlier. It requires a lot of time and a lot of effort, right? That oftentimes don't seem like value add activity because you're like, hey, I'd rather be talking with a sales prospect or I'd rather be talking with, a partner that can help deliver revenue. But it is important to continue to nurture those relationships, even when you're not. And sometimes it's the best when you're not fundraising, right? To build those relationships with investors and continue to grow that network.
Okay, yeah, appreciate that insight and that advice. And Darren, at this stage of your business, do you have a favorite number or metric that you're focused on to guide the business?
I mean, there's several metrics. I mean, I think we still really focus a lot on net revenue retention, largely because of that expansion motion, right? So it's not just the gross side of that or kind of how churn might impact it, but also like, hey, are we seeing those renewal contracts at higher totals? Largely because we know that right now we're only serving a little less than 2% of the employee population of the companies that we're serving today. So there's, a significant growth opportunity if we just focus in on the customers that we're serving today. And we want to make sure that we're delivering or executing on that plan, because we know that we can have a bigger impact, and the overall efficiency of our price point actually gets better for the company the more seats or the more people that they put on our product, and the more we deliver, because in a product like ours, if only 20 or 50 people in 1,000 person company are using our product versus all 1,000, they're only getting a fraction of the value that they could get if all 1,000 employees were on the product. So
Yeah, and so focus on net revenue retention. Are you generally signing annual and multi-year contracts with your clients?
we are, yeah. I mean, usually the first contract is a 1 year agreement, but once we've kind of proven out the value that we're delivering, that tends to move more towards like 3 year contracts at that point.
Okay, that's great. And so, Darren, really appreciate your time. So, what's coming up next for Cloverleaf?
Yeah, well, I mean, fortunately, we do have that most recent fundraise, so we have cash to deploy. And as I mentioned, hiring a sales leader that's scaled a SaaS company from 5 to 25 million in ARR. I think because we rely so much on inbound marketing, finding a marketing leader that, in both situations, we're really just trying to up level kind of our leadership on the go to market side. So heavy focus on that. And I think on the product side, and I'm sure everybody that you interview right now says this, but the AI integration component, and we've always had an eye towards and integrated some level of either machine learning or AI in our product, but continuing to push even further into that. And we have access to a ton of really great data, workplace data, and we want to be able to incorporate those things into the coaching that we're providing, so it's even more personalized, and the development that the employees are getting as a part of that is 10x the value that they're getting today.
Yeah, so a lot of exciting ways to deploy that capital now. So that's exciting. So, Darren, really appreciate your time sharing your journey. If listeners would like to learn more about Cloverleaf, where should we send them online?
Yeah, great question. So don't go to cloverleaf.com, cloverleaf.me. Once you get there, again, a couple different ways you can reach out to us. One, you can start a free trial, and it's extremely easy to do that. Feel free to invite your teammates into that experience, because that's when it's best. The other thing is, as you would imagine, there's some really great demo request buttons all over the website. So if you want to chat with somebody on the sales team, I'm sure they would love to talk with you as well. But if you don't, that's fine. Just start a trial and give it a shot with your team.
That sounds good. So if you'd like to learn more, check out cloverleaf.me. And again, Darren, appreciate your time and sharing your journey.
I appreciate it. Thanks, Ben.
Thanks.